Hi, I'm Kara Murphy, and this is Money with Murphy. Let's talk about corporate earnings. Companies in the S&P 500 have now reported earnings for the fourth quarter of 2023 with generally positive results. For that time period, corporate earnings grew by 4% compared to the previous year, with nearly 3/4 of companies reporting earnings that were better than expected and 2/3 with better than expected revenues. While those beat rates were more or less in line with historic averages, they also confirmed that corporate America is indeed growing again. Q4 marked the second quarter in a row of improved earnings after 3 consecutive quarters of earnings declines. And in contrast to the previous quarter, companies that beat earnings expectations also saw those stock prices increase. So let's dig a little deeper into these numbers. Strong earnings trends were seen across a number of different sectors, with some familiar names contributing a large portion of the growth. 7 of 11 sectors in the S&P 500 reported improved earnings. The strongest earnings were seen in the communication services sector, with growth year over year in earnings by more than 45%, led by Meta, the parent company of Facebook. Consumer discretionary had the second highest growth in earnings, with Amazon leading the way, and Nvidia contributed the bulk of the tech sector earnings. On the other end of the spectrum was the energy sector, where earnings overall declined relative to the previous year, though the decline was much less than expected. Earnings season also revealed an interesting dichotomy between U.S.-focused companies and those that derive the bulk of their earnings overseas. The latter group posted impressive year-over-year earnings growth that was more than 2.5 times that of firms focused in the U.S. When looking at revenues, however, the two groups of companies were flipped. U.S.-heavy revenue companies saw a far greater increase than compared with their foreign-dominated peers. During earnings discussions with CEOs, a few themes were apparent. The most commonly mentioned issue is inflation, though less so than previous quarters. By contrast, mentions of interest rates rose dramatically from the last quarter, and few leaders mentioned the possibility of recession. With the fourth quarter now in the rearview mirror, we can look forward to earnings for 2024. So far, analyst estimates are holding relatively steady at $244 per share for the S&P 500 as a whole, another healthy improvement from last year. We'll continue to monitor developments, and until next time, invest wisely and live richly.